Now, it's no secret that Nvidia has been on fire as of late, but from an investment standpoint, did you miss the boat on it, or is it perhaps now time to take a look at Nvidia? Before I get kind of into more of a conversation, let's start with the numbers today and see what the numbers look like for, again, Nvidia. Their ticker symbol is NVDA. Looking at it, we know they're in the semiconductor space. Not much short on the current stock there. Not a surprise as everybody's loving up on Nvidia at this time. You see short position is 1.2%. Institutional ownership stands at about 68.1%. Now, this is where things get absolutely, I'm going to say, crazy for Nvidia. Price to earnings ratio now 201.5 compared to an industry average of 32.4, well above that level. Price to sales, wow, 37.1, well above the industry average of 5.9. Price tangible book value 51.3. That's below the industry average of 427.7. I'm guessing there's been some consolidation and acquisitions that have been done by other companies that's driven up that tangible book value, but still a 38 times book value or 51 times tangible book value. That is definitely very expensive. Also, price to cash flow now, wow, 140.8, well above the industry average at 18.9. The PEG ratio doesn't look bad as analysts are really expecting some great growth from Nvidia, as we know. See, that stands at 2.2 versus the industry average at 8.4. Now, looking at the earnings per share changes, you see over the last year down 48.5%. I know the semiconductor space is kind of taking some struggles over the last year as it's slowed down. Kind of surprised to see a 48.5% decline, though. Look at the last 5 years, they've averaged 5% growth. You see over the last 1 year, sales are down 12.4%. Over the last 5 years, they've averaged 18.7% growth. But looking forward, 5-year estimated growth rate, this is what I'm talking about, where analysts are loving up on Nvidia, estimated to grow earnings at an average estimate of 21.2%. That's a big positive there. Looking at the dividend, this honestly just kind of cracks me up. The dividend per share is now just 16 cents. Don't even know why they bother to pay it, as it doesn't even register as a dividend yield. It's less than 0.1% at this point in time. They just use 8.3% of their earnings to pay that dividend out as well. Now, turning to the balance sheet, I know Nvidia does have a very strong balance sheet. Current ratio stands at 3.4. Plenty of liquidity for the company. Debt to equity is just 0.5. I've known Nvidia has a very, very strong balance sheet. That's definitely proof with these numbers here. Now, looking at the intangible assets, not too worried about that, only 13.4%. Looking at the receivables, 16.4%, not a ton of receivables on the balance sheet either. Net margin, 18.5. Analysts are really hoping that's going to improve here going forward, because the 18.5% margin is quite frankly not that impressive, but I know they're talking about hopefully larger gains going forward. Also, the return on equity, 19.6%. That's a strong number, and return on invested capital at 13.8%, below the industry average, but I'd still say is quite positive. Now, looking at the current price for Nvidia is $385.10. 52-week high was $419.38. That gave them above that $1 trillion market cap for the first time. And wow, look at this, 52-week low, $108.13. You see the year-to-date return for Nvidia, 163.6%. It's obviously done phenomenal to start the year. Looking over the last 1 year, up over 100%. This is where it just blows my mind. You see over the last 10 years, the stock's up 11,475%. So if you bought that years ago, congratulations on that. You've done very well. That is where I said now market cap, they did fall back below that $1 trillion level, but still $950 billion market cap, one of the top companies now in the S&P 500. Now, going forward for Nvidia, we go out to January 2025. You see estimated earnings per share. Well, that's $9.73. Would give us a target sell price of $161.52. You see they traded a forward PE of close to 39 times. Very, very expensive there. And one thing I have to point out is there's a huge discrepancy between the high estimate and the low estimate. See, the high is $14.17 and the low is $5.95. Analysts are all over the place on what they think is going to happen with Nvidia here. Obviously, my target sell price is well below that current level. And a lot of that stems from, this is obviously not a value company. these analysts are hoping and these investors are hoping that this AI boom is going to continue to play out for an Nvidia, and they're hoping that they can grow into this multiple that is well above historical averages. We know that on average companies trade around 16, 17, 18 times, not 39, 40, 50 times earnings like Nvidia is currently trading at. Could be some problems. I tell people all the time, Nvidia is priced for perfection. What that means is it's not a perfect time to get in. It means that everything has to go perfectly for these companies, and Nvidia in particular. Now, one example that we point out is, again, the tech boom and bust. You had companies like Cisco, Microsoft, and Intel at that time. Now, those companies still grew tremendously and were growing quite nicely in the early 2000s, but their PE multiples had climbed to levels that were just unreasonable. I know Cisco at one point was trading at a PE of like 120 times. Even though they grew sales, they weren't as much as analysts had expected. So even while that growth occurred, their stock price got absolutely hammered because the expectations weren't as high as thought. Now, just kind of speaking about how high the expectations are for Nvidia, if you look at now the market caps for, again, Broadcom, AMD, Texas Instruments, Qualcomm, and Intel. Well, at one point when Nvidia was over the $1 trillion market cap, Nvidia was larger than all of those chip companies combined. Now, looking at the sales for those companies, they were over $180 billion last year. Nvidia is estimated to have about $30 billion in sales. So this is what I'm talking about, being priced for perfection. They really have to have things come through on this AI side and really blow the competition out of the water for the years to come. Otherwise, that stock price will take a massive, massive hit. One thing I look at too is on the AI front, everybody's excited about it at this point. But I do have to say, it's not something I like to get involved in terms of speculation. Is AI going to be like the internet? Is it going to be really a life-changing type phenomenon that does occur here? Or is it going to be like Beyond Meat, where the alternative meats were going to take over, and Beyond Meat's stock price got absolutely crushed there as well. I can see some practicality to the AI and some benefits, but there are still some massive questions, and is too much of that being priced in? And as I mentioned, the big question mark is too much being priced into the Nvidia stock, because everything, if it doesn't go right, that stock, even though the company might continue to grow sales and grow earnings, even let's say they grow at 10%, if estimates are for 25% growth, the stock price will lose a tremendous amount of value. Do your research, go back and look at the .com bubble, and you can see these companies I'm talking about, where Cisco, Qualcomm, Microsoft, Intel, these companies did phenomenal for quite long period of time. And then just to see 70, 80, 90% of their values get, taken away essentially. So being a value investor, I like seeing Nvidia. I think, they've done a great job in terms of their chip design. I think Jensen Huang has been a great CEO, but gosh, that value investment is just not there. And when we look at Nvidia, I'd stay away. I wouldn't invest in Nvidia at this point. As I said, congratulations, you've done well. You may want to consider taking some profits. If it was my money, I would sell out completely. So thanks for watching this video. If you did find it helpful, be sure to hit that subscribe button below so you'll be notified about the future stock analysis videos that we do here at our firm.